Welcome to Second Take, the show that focuses on the issues behind the news. Full transparency is needed in the determination of the gold price and platinum price following the worrying manipulation finding of the UK's Financial Conduct Authority in the case of gold. Mining Weekly editor Martin Creamer tells us more. Welcome, Martin.
Thanks, Shannon.
Can you tell us about the manipulation of the gold price by Barclays Bank and the outcome of this?
Yes, the investigation has been done by UK regulators. They've found without any doubt that an official of Barclays Bank actually pushed the price of gold down, seemingly deliberately so that the bank wouldn't have to pay out quite a lot of money. But they have said, well, this is an isolated incident and it sort of happened once, which, this is a 90-year-old institution where they fixed the gold price. And what really is needed now is some transparency. I mean, why should there not be transparency? Why shouldn't this operate like a normal exchange? What is this fixing all about? People in the gold business say, no, there are trillions involved and we shouldn't worry about this, and they're sure that this will help now to make sure it doesn't happen again. But I think, we are in the precious metals business in South Africa. We have been for a long time. The economy relies on it. We want something reliable, that determines the prices, and something that isn't open to manipulation, particularly by people who should be conflicted. I mean, why should the bank be allowed to fix that price this often that they did on this particular afternoon? If it's going to benefit them to keep it lower, I mean, surely you say, I must recuse myself. I'm conflicted here, because if it goes down, the bank benefits. If it goes up, the bank loses. And then to push it down, I mean, really, I don't know, it's a wonky system as far as I'm concerned. The people are running to its defense, but I think it's indefensible.
How can credibility be restored?
Oh, big searchlight. Let's watch what's going on. Why can't people understand more about this? It's the same with the platinum price and the futures market. Why are we not given privy to how this works? I've asked several analysts this week how this works, and they've all thrown their hands up. No, we don't know. It's a complex derivatives market. But why should we be at the receiving end of a complex derivatives market when we're suffering as a result of it? You can see how the way sales take place. The same people on both sides. I mean, it's like Amla, who's just been appointed cricket captain. He can say, well, look, I'll bowl to myself. I'll run across and then hit it, smack it, and then, I mean, it's like selecting the bowler to bowl to you, so that you can hit the ball out of the ground. It's not on, especially since we've had 19 months of platinum strike. And one of the issues has been that the mining companies say, look, we can't find that 4.5 billion yearly to pay this 12,500 minimum wage. It's just beyond us at the moment. But would it be beyond the company if this price wasn't continually pushed down? As you can see, it is done in the futures markets. There's no metal there. It's all paper. A pile of paper like this.
It should be sold for the highest amount.
One would think that you'd have a fair and active market in a commodity like this that resulted in an openness that you could see, like a Johannesburg Stock Exchange or whatever. Maybe there's also manipulation there, I don't know. But an exchange, well, I'm talking about the gold now, which is more of a gold fix. But on the futures market there, people looking at it saying, look, they don't think that this is a fair market. There's insufficient activity. There's a continual rolling over. And it seems very mechanistic. Why have a market like that? It doesn't seem to be a real market. And if both sides are, if the same parties are on both sides, as some people allege, bankers, what sense does that make?
What is the main contention with the current platinum price, and what consequences will that have?
Well, Dr. Murrell of Melbourne, he's a private trader, and he's been studying this up for some time. And he is the one that's put out a paper saying that there needs to be a lot more transparency with this market. As far as he's concerned, it's fiction. And it's impacting on people of Africa. They are the ones that have this metal, but they don't have any control of the price. It's out of their hands. And he's suggesting that the people who do have the control should perhaps be recusing themselves. They're conflicted. And we can see it in the price at the moment. Even though we've had a prolonged strike, it hasn't set the price on fire. Even though supply is down, the figures are down, you don't see a dramatic increase because it's sold well into the future at a price that has the effect of lowering it, because the fabricators who use it, they use this futures market to hedge themselves against price risk, so that in between them getting it from the mines and then invoicing their clients, they can have stability in the price. But it's obviously in their interest too to push that price down, because their margins maybe will stay the same, their own margins, but the margins of the mines, as a result of what they do, can be lowered, and that impacts on the workers here, it impacts on the government here, it impacts on the value of our exports. And I think that we need to deal with this in a better way. You know, I don't say we go all the full hog of the potash miners in Canada, in Saskatchewan, but they've created a single channel market. Maybe that's a bit too rigid, I don't know. But we need something that is more transparent and open than what we've got.
Why is there such a lack of action to call for the establishment of an independent inquiry into why the gold and platinum prices are sold in such a cloudy way?
You find that local people have got a bit of like I spoke to one marketer within a mining company now, you know, Derek Engelbrecht of Impala Platinum, and he's saying, no, you've got to understand these markets better, and he defends them. So he's been working with them for a long time, and he's saying there's like a lack of understanding here of what they're all about. There's not going to be a lot of metal there. There is going to be a lot of paper there, because it's a way that the commercial side of it, the fabricators, the users, the way they protect themselves from price risk. So you do have people defending it, and I don't mind that. I'm not ideological about it. I don't want to take sides on this, but I do think we should know far more about it. I mean, I emailed 2 London analysts who threw up their hands and said, no, we don't know how this really works. And so it is a bit opaque. It's opaque. People don't understand it. It is always complicated. I mean, futures markets are complicated. But it can be simplified if we learnt more about it, if people spoke more about it, also spoke at presentation of results, you know, gave us more of an idea of how this market works. And then, you know, I suppose the only way is for them to publicly publish these figures in a way that also indicates some sort of method of arriving at these from a demand point of view. But it's not at all clear. And I think being in the mining business here, we concentrate on mining and we forget a bit about how the pricing situation works. And I think we should know more about it.
Well, thank you very much, Martin.
It's a great pleasure, Shannon.
That's it for today. Join us again next week for more news analysis on South Africa's mining industry.